Alright, what's up everyone? Welcome to another video. This one is going to be a quick update on the market for the start of a new week, basically the start of a new month. And the first thing that jumps out on me on the technical picture is this price channel. You can call it a ascending wedge if you like. This was October's bullishness. We had something like an 8% jump in price, and like I said, the first thing I see is this breakdown of this price channel or this wedge. That's short-term bearish development there. So I got a short position after Jerome Powell's comment. I covered that position when I saw the bounce happening, and I noticed that VIX wasn't climbing like I wanted for my short position to be profitable. So I covered that short position, waiting to see what the market does this week. Futures markets opened with a slight gap down, but the price action is climbing at the moment. We're still red, minus 44 bips. But just over the past 15 minutes, we jumped about 40 bips to the upside. So this price is climbing, but it's still very early in the futures market just opened. So this could be nothing at all. We'll see how the market plays out when all of the world markets open up for trading. And like I said, the short-term trend is, the very short-term trend is bearish at the moment. October was super bullish, but Jerome Powell killed that. He dropped the S&P 500 futures price below this fib level, and this is around the $3,800 level. This is a long-term Fibonacci level, so this is consider this a strong support or resistance level. Right now it's going to be a resistance level. And you can even see this candle wick here that I just highlighted. That shows you that it already acted as a resistance right here. The price action came up and rejected it already for that one day on that daily candle. So we'll see what happens. If we get above this Fibonacci level, I'm going to flip back to bullish. And if I need further confirmation of that bullish position, if the price gets above this downward trending resistance line that I've highlighted in purple, if we get above the Fibonacci level and that resistance, that dynamic resistance, then I'll definitely feel good about my long position again. But if the price comes up to either of these and gets a strong rejection with volume and price momentum, or price action momentum, I should say, then I will definitely convert my covered short position back to a full-on short position. We will see how that goes, but as of right now, I'm on the fence. I thought October's bullishness would last a lot longer than it did. I thought the price action was going to climb up to this resistance level before rejecting, coming back down, turning around. This resistance level I'm pointing out is the long-term bear market resistance that's held us down since last November. We can see we have rejections or price reversals around this area in the past. I thought we were going to do that again this time. I was thinking that until Jerome Powell killed the markets again. It could still very well happen. This bearishness following Jerome Powell's interest rate decision, or the Federal Reserve's interest rate decision, I should say. That bearishness, this could just be a correction from October's really bullish month. I mean, it was like an 8% jump or something like that. So this could be a small correction, who knows? Like I said, right now I'm on the fence, keeping my eyes on that Fibonacci level. If the price does come up, if we drop to new lows below last week's lows, then I will definitely go back to a short position. On the S&P sector index side, we got real estate and healthcare cut off the screen here. But all of these sectors are showing bullish price channels here, somewhat similar to one another. Aside from consumer discretionary and communication services index, those still look pretty bearish. Ignore this Dow Jones sector index here. That one's not part of the S&P indexes. But basically, most all of these sectors are showing signs of bullishness. RSI on most of these are in bullish territory, or when RSI is above the 50 value. Basically, some of them are showing signs that they are about to pop into bullish territory here. Here are the other 6 S&P sectors. They're all looking bullish. They all have somewhat of a bullish price channel with RSI above the 50 value. Everything's looking like bullish territory. Here's communication services I was talking about that looks bad with the consumer staples. So don't invest in that one, right? It is actually near a downward trending support that I highlighted, so you might catch a bounce in consumer discretionary actually very soon. But right now the trend is down in a hard way, so don't even touch this thing until we get a bounce. And I do want to point out also that the sell-off in a lot of these sectors that came from Powell's comments, you can see where I'm highlighting these these red candles that came in. A lot of these sectors already got a bounce off support after Jerome Powell's comment, so it seems like he didn't phase this uptrend that started October. And a lot of these sectors look much better than the S&P 500, at least for the past couple weeks, I should say. And that's all the sectors. So from a sector standpoint, things are looking generally bullish, at least I could say off a hip shot, 75% bullish on the sector technical standpoint here. But we have to pay attention to what Jerome Powell said. After all, we are in a bear market. The long-term trend is down. The midterm trend is still technically down. The very short-term trend is down. And the Federal Reserve, Mr. Jerome Powell himself, has said they're going to keep hiking interest rates until they see inflation coming down. They said inflation is nowhere near where they want it to be for them to start slowing or pivoting the rate hiking scheme. The Fed is still decreasing their balance sheet. The war in Russia is still going on. The macroeconomic environment looks bearish. We should be looking for shorts, technically speaking. A lot of times you'll hear the narrative when we see a premature uptick in price. Oh, the market is pricing in for the future, maybe a year out, 2 years out, who knows. Right now the market looks like it's at an extremely discount relatively compared to some of the all-time highs in a lot of these major indices and stocks tickers. So that's why you might see some of these bear market rallies as well. But you don't want to fight the trend. So right now I'm waiting to see what happens today and tomorrow to decide if I'm going to go full on long or full on short. I'm definitely watching this Fibonacci level at that 3,800 price point I mentioned earlier. And that's basically it for the video, guys. If you like what you heard, as always, hit the like button, leave a comment, subscribe, hit the notification bell, all that good stuff, and I'll see y'all on the next video.